Hello, a great, lovely, rainy, and very enchanting evening once again. So, lots of requests were being made of late, actually, especially with respect to Section D, December 2021. Lots of requests I have been receiving. As I told you, this question is of December 2021, and many among you were quite interested in having solution to this particular question. Correct Section D case study question. So today we have decided to take it up just to satisfy your request and satisfy your curiosity both. Although happens to be pretty long question, no doubt about it, and at the same time pretty strong question for the student fraternity at least. Now, in this particular question, let's have a look. First of all, here it states that Tushar and Tashika Limited provides you the following information. Of course, this particular question relates to earning per share, that is AS20. On 1/4/2020, they are having what we call in the beginning 5 lakh number of share. These are number of share, not in rupee terms, but in numbers. Then on 1st of June 2022, they issued shares for cash. 1,20,000 shares have been issued for cash. You have to now take care of the dates. Very important. Very important. You have to take care of the dates. Correct? And then further it is mentioned in the question that on 1/7/2022, that is very next month, they issued some share to the underwriters, and then they bought back shares 2,69,250, that is 1/8/2020. And then again on 1st of September, they issued share for against purchase of building, correct? That is 30,000. And then very next month, they issued shares in settlement of a liability, that is 15,000. Now in here, it is written that Tushar and Tashika Limited, they acquired or purchased Y Limited on the basis of intrinsic value of share of both the companies. The intrinsic value of share of Tushar and Tashika Limited and Y Limited are rupees 60 and rupees 50. Try to understand this particular point first of all. What does this particular point state? This particular point states that Tushar and Tashika Limited, correct, they are acquiring the business of Y Limited. An intrinsic value of share of Tushar and Tashika Limited happens to be rupees 60, and intrinsic value of Y Limited is equal to 15. Because intrinsic value of Tushar and Tashika Limited is higher in comparison to this company's intrinsic value, now the ratio of exchange will be equal to 1:4. If you remember, when I was taking classes with respect to Ind AS 103, even over there we talked a lot and at great length with respect to intrinsic value of share. Correct? So it means, first of all, what does it shows? It shows that Tushar Limited, because their intrinsic value is higher. Correct? It means actually this company, Tushar and Tashika Limited, will issue only 1 share against Y Limited's 4 share. That is the meaning of 4:1. And that means for your 4 shares, we are going to issue you only 1 share. Why? Because our share's intrinsic value is 60. We are going to issue you only 1 share. So 1 into 60 is equal to 60. And intrinsic value of your 4 share at the rate of 15 per share is equal to 60. So whenever you get the what we call ratio, simply crisscross it so that you get a better idea. It means for your 1 share, we are going to issue you only 1 share for your 4 shares. Now, total number of shares of Y Limited is equal to 4,80,000. So, there are 4,80,000 shares. And for every 4 shares divided by 4, we will issue you only 1 share. That is equal to 1,20,000 shares. So basically on 1/11/2020, it means Tushar and Tashika Limited issued 1,20,000 shares. 1,20,000 shares, correct, to Y Limited. Then further it is given splitting of shares into shares of rupees 10 each. What does it mean? Splitting of share. Splitting of shares. Suppose I have got 1,000 share and face value of 1 share is equal to 100. Correct? That means total 1 lakh worth of share I am having right now. Let us say if I split them into 10 rupee share, indirectly it means now number of share will be equal to 10,000 but at the rate of 10. There will be no change in the face value, total face value in rupee terms, but there will be change in number. Earlier we were having 1,000 share, now we are having 10,000 shares of rupees 10 each. That is what we mean by a split of share. Just to make you understand the meaning of this, actually I explained this. Correct? And then further it is given bonus issue is also given on 1/1/2021. The splitting of share is done on 1/12/2020 and on 1/1/2021 bonus shares were issued. So first of all, without going through rest of the line, first of all, let me do the treatment only till up to this particular point in this particular question. Is it clear to you? Now let's have a look actually how to solve this particular question. On the basis of the information which we have just gone through, first of all, I will have to compute calculation of weighted average number of shares. Correct? And we have done it at great length when we were discussing what we call concept of earning per share under AS20. So it is very simple. On 1/4/2020, we are having 5 lakh share. So weighted number of, if I am going to compute the weighted number of share, I will have to take the weighted period in months. So this share must have been used for 12 months. So 12 by 12, that is 5 lakh. Correct? 5 lakh. Similarly, on 1/6/2020, it is given in the question that we have issued some share in the form of, on 1/6/2020, we issued shares for cash that is equal to 1,20,000. So you have to take into account the date very clearly. Correct? So 1,20,000. So 1,20,000 because you issued on 1/6/2020 in the current year, you must have used them for 10 months. So that is why I will multiply 1,20,000 with 10 and divide it by 12 to get what we call effective number of share, that is 1 lakh. Similarly, on 1/7/2020, we gave shares to underwriters, but because these shares were issued on 1/7/2020, so period remaining is 9 months. So effective or weighted number of share will be 4,500. On this particular date, 1/8/2020, we bought back 2,69,250. We bought back. It is a case of buyback, so we will have to subtract it into 8 by 12, correct? And whatever figure you get, you will have to subtract it. Similarly, on 1/9/2020, we issued actually 30,000 shares. I have forgotten for which purpose we have issued. On 1/10/2020, 30,000 shares were issued for purchase of building. Point is that we have issued shares on 1/9/2020. So 7 months are remaining. So 17,500 will be effective number. Similarly, in settlement of liability, you issued on 1/10/2020 15,000 shares. So period in this case, because you have issued these shares on 1/10/2020, so that means remaining period is 6 months, so 7,500. And 1/11/2020, I told you, Tushar and Tashika Limited actually acquired Y Limited. And in order to acquire Y Limited, we will have to issue them share. Total number of shares of Y Limited is equal to 420. For every 4 share, we are giving only 1 share. So that means we are issuing 1,20,000 share into 5 by 12, total 50,000. By adding all these things, now you will get weighted average number of share that is equal to 5 lakh. Is it clear to you or not? Now further, it is given that on 1/12/2020, there is splitting up. Are you getting my point or not? So there is a splitting up of shares. So in order to splitting of share, now the share is of rupees 10 each. So total worth of 5 lakh share at the rate of 100 will be equal to this much, 5 lakh into 100, as I told you earlier. And then you divide it by 10, because now you are indirectly splitting up, means now you are splitting the shares into face value of 10 from 100. So ultimately the face value will remain same. It will have no impact. But only thing is that your number of share which were earlier 5 lakh, now it will be equal to 50 lakh. So number of share will increase because earlier your share was worth rupees 100 each, but now your shares are worth rupees 10 each. So we may say that weighted average number of share outstanding is 50 lakh because of split up now. Is it clear to you? Not only this, on 1/1/2021 we made a bonus issue. Because now our shares are 50 lakh and bonus issue is in the ratio of 1:2. So into 1 by 2, that means 25 lakh more shares we are going to issue. So total weighted average number of share will be equal to 75 lakh. Is it clear to you or not? Is it clear? So this should be your first and major target. Now what else the question is asking and given information? Question has given information that, where is the, after this the question has given that there are 12% convertible debentures of 100 each, correct? Number of 12% convertible debentures of 100 each is equal to 1 lakh. So this company might be having some debentures in which are convertible. Interest on debentures since the issue date, issue of debenture is equal to 3 lakh. Further, it is given that conversion ratio of debenture is actually 10 per debenture. That means as per our original agreement, when this company had earlier issued the debenture, it must have committed them that we are going to convert your debenture, correct? And conversion ratio is 10 share per debenture. That means for every 1 debenture, we are going to issue you 10 debenture. Now the important point is that net profit for the year ended given to you 2020 is 85 lakh, and net profit for the year ended, that is the current year, because the current year is starting on 1/4/2020 and ending on 31st of 3/2021. 31st 3/2022. This is your current year. So net profit for the year ended 2021 is actually 1,10,000. Your current year actually is starting on 1/4/2020 and ending on 31st of 3/2021. I'm sorry. So net profit is actually 110 lakh. Tax rate given to you is as 30%. Now there are 10% cumulative preference shares of 100 lakhs. Because they are cumulative preference shares, the standard says that when we compute net profit attributable to equity shareholder, we must subtract the preference dividend provided preference dividend are cumulative. For example, our net profit for the year ended is 110 lakh and 10% cumulative preference share is equal to this much. Correct? That is 100 lakh. If I am going to compute the what we call dividend, 10% dividend, the preference dividend will be equal to how much? Your preference dividend will be equal to 10% of this figure. Just wait, the mic was about to fall. The preference dividend was equal to 10 lakh. 10% of this figure. Because net profit for the year ended given as 110 lakh. So I am going to subtract this 10 lakh preference dividend to find out profit attributable to equity share. So profit attributable to equity share will be equal to 100 lakh for the current year. And your last year is 1920. Correct? Last year's profit 85 lakh is given. Now what is the profit available to equity shareholder for the current year? Your answer should be 100 lakh. Besides that, we have been given in this question 12% non-cumulative preference share. Now, in case of non-cumulative preference share, as we know, that if we do not pay the dividend, that dividend will not be subtracted, neither it will get accumulated. Question has further given that no dividend has been paid on preference shares since last 3 years. So, it will not make any problem, but the problem is with respect to 10% cumulative preference share. So current year's dividend I must subtract while computing profits attributable to equity shareholders. So now we have computed the weighted average number of shares. So now we are in a position to compute the basic earning per share for 2020-21. Correct? This is our current year. I have just told you, in fact, this is also answer to your question number 1, because your question number 1 is asking what is the amount of profit available for equity share or attributable to equity share. So your answer is 100 lakhs, and you should know that how you drove out actually 100 lakh, because in the question you are given 110 lakh. You have subtracted 10 lakh worth of preference dividend. So net profit available is 100 lakh. And weighted average number of share we have already computed, that is equal to 75 lakh. Simply by dividing it, you are going to get 1.33. So this will become your basic earning per share, and this is answer to third point. Because in the third point, they have asked actually what is the basic earning per share for the current year. So that is equal to 1.33. All the answers are absolutely correct. All answers are absolutely correct except the last one, but I don't think that is a mistake on part of the institute. The last answer institute has printed as 1. Actually, it should be 10 per share. Otherwise, all the answers are correct. Correct? I have rectified the same also. So it has consumed actually near about 4 to 5 hours of mine to detect that particular mistake. Anyway, diluted earning for 2020-21. Now we have to find out what we call diluted earning for the year 2021. Correct? Net profit for the year is 100 lakh, which we have already seen. Now, we know that some of the debenture will get converted into equity share. Some of the debenture will get converted into equity share. So, we will have to add interest on debenture. How much interest actually there will be on the debenture? There are 1 lakh debenture. And one debenture is actually of worth rupees 100 lakh. Correct? One debenture is rupees 100, worth rupees 100. Just wait. Let me check it up also. It is given in the question that 12% convertible debentures of 100 each are also given to you. Is it clear to you or not? So all these things are given here in the question. Just wait. Actually, I'm looking at something. Just wait. So net profit for the year is actually 100 lakh. And now when debenture will get converted into equity share, try to understand this particular point. Interest on debenture, if I am going to compute, correct? Interest on debenture, 1 lakh debenture, face value is 100, 12%, total interest will be equal to how much? Total interest actually comes down to, I think it comes down to 12 lakh. It comes down to 12 lakh. Now here the point you need to note is, in the question it is given that interest on debentures since the time of issue, correct, since the time of issue actually is 3 lakh. Interest on debentures since issue. So whenever we must have had issued these debentures, logically, indirectly, it means we must have had issued these debentures 3 months back. Because if 12 months interest is 12 lakh, then 3 months interest will be equal to 3 lakh. So that is how I can derive that these debenture must have issued 3 months back. Correct? So anyway, this was the point actually I was trying to figure out. So 1 lakh into 100. 1 lakh into 100 is your total worth of debenture. And then you are going to multiply it with 12% interest and 3 months interest, because I have already told you how I have been able to find out that these debenture must have been issued 3 months back, because interest amount is already given to you, honestly speaking. So if 12 months interest is equal to 12 lakh, quite obviously 3 months interest will be equal to 3 months, correct? Now, why I am going to add interest? Because if these debentures will get converted into equity share, there will be saving. We need not require to pay the interest then, isn't it or not? So that is why we are going to add the interest. But remember one thing, when presently we are writing interest, because presently these debentures are with us. So when we are preparing our profit and loss account, quite obviously the amount of interest must be actually shown towards the debit side. So when you are showing the interest towards the debit side, your tax liability is also getting reduced because of interest expenses. But now we are adding back interest on the presumption that once this debenture will get converted into equity share, then entity need not require to pay interest expense. So that is why we are going to add interest expense. But at the same time, what will happen? The tax saving which we were getting earlier will be no more. Are you getting my point or not? So that is why I am going to add the interest on debenture, but I am also going to add tax on debenture interest. This is debenture interest. Correct? You are going to add what we call tax rate. Now you will find out 30% of what we call 3 lakh, that is equal to 90,000. So that means your net profit will, due to interest, your net profit will increase, but due to what we call wiping out of your tax saving, your profit will now get reduced by 90,000. That is 30% of 3 lakh, that is 90,000. Is it clear to you? Now, what we get, that is equal to, it is known as adjusted earning, or we can simply say this is net profit attributable to equity shareholders. Attributable to shareholders. So this equity shareholder, because out of 100 lakh, we have already, out of 110 lakh, we have already subtracted over 10 lakh worth of preference dividend. So this is your net profit attributable to shareholder. And one of your question is, for diluted earnings, what is the amount of net profit attributable to equity shareholder? I have also written here answer 4. So this is your answer 4, 102 lakh 10,000. Is it clear to you, sir? Clear to you? So now, net profit available we have found out. We have now got weighted average number of shares. Weighted average number of shares we computed for basic earning. Remember one thing, for basic earning we computed as 75 lakh. Correct? We have already computed that. But just a moment ago, we have seen that there are 1 lakh debentures and they have the potential to become equity shareholders. So we have to add what we call potential equity shares, isn't it or not? In order to compute the diluted earning per share, we need to take into account adjusted profits for equity shareholders, and we have to divide it by what we call total number of weighted average number of share plus potential equity shares. So total number of weighted average shares we are already having, but now 1 lakh debenture will get converted into equity share, and to each debenture we are going to issue 10 equity share. So total equity share will be 1 lakh into 10. Correct? That is equal to 10 lakh. But you must understand that you will have to keep the same time frame in your mind, because these debentures were issued 3 months back. So you will have to multiply it by 3 by 12. This is also very important. So 2,50,000. Now your total weighted average number of equity share will be equal to 77,05,000. Is it clear to you or not? This is also answer to your second. 77,50,000. So total profits attributable is equal to this much, and total number of shares which you are going to consider now to compute diluted earning will be equal to 77,50,000. So by dividing what we call this figure by 77,50,000, you are going to get diluted earning per share 1.3174. So again, this answer is also, in fact, all the answers are correct. And finally, question has also asked what we call compute adjusted earning per share for 2019 and 20. Adjusted earning per share for last year. Now profit for the last year is 75 lakh. Actually, we have been given 85 lakh worth of profit, but you will have to subtract 10 lakh worth of dividend. So your profit for last year will be considered as 75 lakh. Correct? 85 lakh minus 10% preference dividend. And weighted average number of shares, we have already computed 75 lakh. Is it clear to you or not? Now, you know that company has issued some bonus share, and whenever we issue bonus share, we have to restate the earning per share of the last year also. So first of all, let me add to this figure the bonus issue, 5 lakh plus 5 lakh into 1 by 2. See, actually, our bonus issue will be equal to 7,50,000. Are you getting my point? After the bonus issue, our total number of share will be equal to 7,50,000. I'm very sorry. Weighted average number of share outstanding for basic 75 lakh is given, but I will have to restate the earnings, and it will be equal to, that is net profit for the year divided by 5 lakh plus this much, it will be equal to 7,50,000. So your earning will be equal to 10 lakh. Why? Actually, just let me clarify it. Net profit for last year is 75 lakh, 85 lakh minus preference dividend. And number of share, last year we were having number of shares, last year we were having actually 5 lakh. We have to restate the earning whenever we are going to make a bonus issue. So bonus issue in the ratio of what we call, for every 2 share we are offering 1 share as bonus issue, so 2,50,000. So after the bonus issue, number of share will be equal to 7,50,000. Now I will have to divide 7,50,000 by 750. So adjusted earning will be equal to 10. This is how we have to solve this particular question. Now, many among you were feeling that this question is very complicated. No doubt for everyone. That is why no other faculty has dared to give a solution to these type of questions. In fact, to any of the questions with respect to what we call all these suggested questions. So on demand, I am solving this question under extreme pressure situation. Why? Because time is extremely constraining. You people simply messes it. Problem is that you never understand the predicament, whether we are having time or not. But anyway, at the same time, it is our duty to see to it that each and every one and every student of every course gets complete comprehensive amount of satisfaction. So we have tried it out, and fortunately in this case all the answers, no complaints, all the answers are absolutely correct. So quite obviously each one of you would now message me, sir, please upload this particular sheet. This particular sheet will be uploaded, and tomorrow at 11 a.m. you can download it from my Telegram channel. Correct? So this is all for the day in this particular session.